You can have like a 70% win rate, but if it takes you 3 clicks instead of one to exit a crashing trade, well, your platform's going to bankrupt you before the market even does.
Yeah, exactly. I mean, aesthetics are honestly the biggest trap in retail trading today. A beautiful dark mode and, glowing charts, they don't really mean a thing if the underlying mechanics are actively working against you.
Right. Which is why, welcome to this deep dive into CFD trading platforms. We are looking at a stack of recent broker technical reviews, user analytics, and platform specs to really understand why picking your trading environment based on a flashy screenshot is just a massive mistake. Your platform isn't just a button to click buy or sell. It is your ultimate risk control center.
And that control center needs absolute frictionless usability. When you're operating in fast, volatile markets, friction just instantly translates to lost capital.
Yeah, you have to be able to manage risk, track your margin, and adjust stop losses instinctively. It's like having a state-of-the-art sports car, but you can't find the brakes when a deer jumps into the road.
Exactly. If a sudden market reversal hits, you do not have time to navigate like 3 layers of settings. You need the brakes immediately.
Absolutely immediately.
Which is why a robust desktop experience really has to be matched with a highly capable mobile app.
Well, for sure.
Because you might build these complex setups on a multi-monitor desktop, but if you step away and the mobile app is clunky, you are essentially flying blind. The handoff between devices just has to be seamless to protect your positions.
But wait, hold on. If frictionless usability is the ultimate goal, why are the most popular platforms still the ones that look like, a 1990s Bloomberg terminal? Doesn't having 30-layered charts and every possible technical indicator loaded on day one give you a massive data edge?
Actually, it usually creates cognitive overload.
Wait, really? Overload?
Yeah, for most beginners especially, blasting the brain with 60 different data points simultaneously just slows down your decision-making. A superior setup isn't about having the most indicators, it's about modularity.
Right, customizing it.
Exactly. The best platforms allow you to strip away the noise and hide everything you don't actively use.
Well, that explains why the platform landscape is still so fragmented. Take MT4.
Oh, yeah. Classic example.
It's decades old, but traders just refuse to leave it because an entire generation built custom algorithmic bots in its specific coding language, MQL4. I mean, upgrading to a slicker UI means rewriting 10 years of profitable code.
Precisely. Traders stay for the underlying mechanics, not the interface. MT5 eventually expanded on that architecture to allow for deeper market data and multi-asset routing while keeping that familiar feel.
Makes sense.
But if a trader relies on modern, high-frequency execution today, they are forced to look at something with a more advanced API structure, like cTrader.
Or they just bypass the visual interface entirely. We're seeing a massive surge in copy trading features for that exact reason.
Oh, definitely.
If staring at a complex charting workflow doesn't fit your psychology, you just plug your account into an established strategy and let someone else's system handle the cognitive load.
Yeah, because whether you are manually clicking buttons or running high-frequency algorithms, the software itself is really only the front-end shell.
Right, which means if the broker's back-end servers can't handle a flood of API calls during, say, a major payroll data release, the fastest platform in the world is still going to freeze up on you.
Yeah, you're basically putting an F1 engine on a dial-up connection.
That is such a good analogy.
That is the crucial bottleneck. Platform stability is dictated by server hardware, routing efficiency, and server-side latency. A broker might advertise razor-thin spreads and zero commissions, but those pricing models are completely worthless if the server crashes the moment you try to execute a trade.
And the reviews we looked at actually highlight Monaxa as a prime example of getting this balance right. They don't just offer the front-end platform choice. They back it up with really robust infrastructure across a huge range of assets like Forex, crypto, indices.
Right, and deep infrastructure is what allows traders to actually capitalize on that broad asset coverage. You can seamlessly pivot your strategy to wherever the market momentum is.
Because the server routing can handle the traffic load during peak volatility.
Exactly. It marries the visual platform with the invisible back-end power.
So for everyone listening, the big takeaway here is to test drive platforms based on how you actually trade today under the stress of real market conditions. Ensure your critical risk management tools are front and center, not buried in hidden menus.
And verify that your broker's server infrastructure can actually support the platform's demands when it really counts.
It does make you wonder about the future, though. As algorithmic tools and automated copy trading continue to take over, Will the visual interface of a trading platform even matter in 5 years?
That is the real question.
Right. Or will your platform simply become invisible code, executing your strategy in the dark? Something to think about.